Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, this is the 1 hour chart of gold USD in front of us, and we can see that gold is right now standing at 1973. The this week's opening was very important for gold because when the market closed, okay, we could see that there was some sort of selling pressure, and right after the market opening, it was very important for us just to see whether the selling pressure continues or the market shows some recovery. But on the contrary, we saw that there was not much volatility in the market, but still we can see that slowly market is going down. Okay. And if we look at the trend of the market, yes, the trend of the market is still the same. Market is still inside the range only. If you have a buy position on the chart of gold, then you can clearly see that this is how the market is moving. So if you're trapped right now, at one point I think market will bounce and you will get your exit, because most probably your buy position is around 1990 1985, then you should get your exit, because I don't think so that gold will be falling or gold will show a free fall today, because market is mostly waiting for tomorrow's speech here. You can see Wednesday, November 8th, we have a speech coming up, Fed Chair Powell's speech. So market is mostly waiting for the speech. Till then, we can expect that market will mostly remain choppy, market will mostly remain sideways. You can see here gold inched lower in early Asian hours on Tuesday as the dollar staged a rebound. Although bullion prices were stuck in a tight range, with investors staying on the sidelines ahead of comments from Federal Reserve officials, including Chair Jerome Powell. So this is the market sentiment right now. Gold was extremely bullish for the last couple of weeks, and the reason was the conflict between Israel and Palestine. But right now market has mostly digested the news, and market knows it very well that the conflict between Israel and Palestine will go on. Listen to me carefully. Market has digested the conflict. As a result, any new development on the Israel and Palestine, okay, market is not responding. Probably you guys are seeing that Israel is attacking Palestine, but right now market is not responding to the news. Market will be responding again if a third country joins in. If a third country participates, let's say Iran, Russia, USA, if any country participates, market will consider it as a trigger event for the Third World War, and we will see gold flying again. But if the same situation remains, then mostly you can expect that gold has digested the news and gold will not be responding like it used to. Okay, and you can expect that more or less the market will be behaving in a normal manner. So this is the chart of gold right now, and the levels that we have discussed in our previous videos are still the same. I have a buy limit at 1970. I have also placed a buy limit at 1963, and hopefully I'll get my 40 pips because we can see that the levels are still the same. But here I would like to show you something. For that we need to go to the weekly chart here. This is a weekly chart of gold, and you can see that this is the candle formed by the market this week. Last week market formed a hanging man. Before that also market formed a hanging man, and hanging man is a trend reversal pattern. So technically we can see the market is giving us signs that there is a possibility of a trend reversal, and this is a weekly chart, and therefore their weekly charts are strong signs. Okay, and one more thing that I would like to mention here is that you can see market has already entered the resistance zone here. Okay, yes, market is not reversing perfectly from the level, but as we all know, support and resistance, these work as zones in the market. So right now we can see the market has entered the zone, and from there, okay, market is slowly showing signs of reversal here. So technically we have an indication that yes, market is going down. Okay, and if we look at the options data here, this is a big thing. You can see here at 2000 we have 10,000 contracts. So I don't think so market will be crossing 2000 right now. Where do we have the resistance on the chart of gold? If you look at the chart, then we can clearly see we have resistance at 2008 2010, and before 2008 2010 we also have resistance around 2002 to 2004. These are the two resistances. But if you look at the data here, then we can clearly see that we have a strong brick, we have a strong wall of sellers at 2000 level. Okay, so if the same market situation remains, then I don't think so that gold will be having the power and strength to cross 2000 level. If gold recovers also, let's assume that today gold shows good recovery. Gold starts forming big green candles, but still gold will face serious strong resistance at 2000 level. And yes, there is a good chance that gold will fail and gold will reverse again, because the big guys sitting at 2000 level will not allow the market to cross that easily. If a news comes out, okay, if a news comes out, then it's a different chapter. Then the market sentiment will break everything and gold will start flying. Not flying, flying. Okay, but before that, I don't think so. Gold have the strength to cross 2000 level, and the sellers sitting at 2000 will push the market down, obvious, and they will not allow the market to cross that easily. So yes, there is a good chance that gold is going down. Okay, if not a complete trend reversal, at least we will get to see a little bit of a downside. And where is the next support then? Okay, if you look at the options data here, then the next support is around 1950. Let me show you. You can see here we have 1950, because at 1950 we have the highest open interest. Okay, so 1950 is the next support as per the data. But if you look at the chart here, then also we can see more or less we can see the same stuff here. So as per the data, okay, technically what is the range of gold right now? Okay, I know it is a little bit complicated, I'm extremely sorry. Okay. See, technically, if you look at the chart, what is the range of gold right now? The range of gold is 2010 to 1960. And if you look at this data, then the range of gold is 2000 to 1950. Now let's combine both the things. Okay, now let's combine both the things here. We are back to the chart of gold. So as I told you guys that I have a buy limit at 1970, because 1970 market bounced previously, and you can clearly see the market is slowly approaching. Do we have a very strong volatility? No, we don't have much volatility in the market. So if the same volatility remains, we can definitely expect a bounce. If not a complete trend reversal, at least we can expect a bounce of 30-40 pips at 1970 level. Okay, and then where is the next support? The next support is around 1963, or the second support, you can also say 1963 to 1960 is the second support. Why it is the second support? Because of previous price rejection around the area support, as well as you can see we have FIBO 23.6% retracement level. So first support is around 1970. It's not a very strong support, but if the volatility of the market is low like this, we can expect a temporary bounce of 40-50 pips. Similarly, we have a next support at 1960-63. Not a very strong support, but still we can expect that market will be bouncing. If not a complete trend reversal of 400-500 pips, at least we can expect a bounce of 40-50 pips. As a day trader, I'm doing that only. My TP is also set. Okay, how much my risk to reward ratio? I'm going for risk to reward ratio of 1:1 right now. Not expecting much. So here you can see that we also have support around 1954. Okay, the third support is around 1954. 1954 is a support, and if we look at the data, okay, you can see 1950 is a support. So we can consider that 1954 to 1950 is a good support. 1950 to 1954 is a good support. Okay. So if we combine the chart and the data, we can see that the actual range of gold is 2010 on the upside, and then we have 1950 on the downside. This is the range of gold right now. So what should be a strategy then? See, tomorrow we have FOMC coming up. After FOMC, market may go for a direction, but before that, I don't think so market will be going for a particular direction. Market will be going for a trend continuation or a trend reversal. So if you're a day trader, then obviously you should be looking for quick entry and exits. How much you can expect? You can expect around 40 to 50 pips per trade. So if market bounces from here, you can go for a buy. If market bounces from here, you can go for a buy. And if market comes down, suppose there is a selling volatility in the market, selling pressure is high, and you can also expect a buy around this area. If you're a beginner, simply switch to a lower time frame like 15 minutes and then go for a buy. See, I have my risk management skills. Okay, I have been trading for a long time. That's why I can place buy limit, sell limit before taking the trade, because I understand the volatility of the market. But if you're new to the market, then obviously it is not advisable for you to place buy and sell limits. It is better for you to observe the market and then take the decision, because my dear friend, do not forget there is a very thin line between trading and gambling. Most of us do not realize, but most of the time we gamble. Okay, and don't make the mistake. Do not play with your capital. Because sometimes we think that I have only few $50, $100 in my account. Okay, I'll again put the money. Okay, but never forget that if you are going against the discipline, it means that you are gambling. And every capital, whether it is a $50 account or it is a $50,000 account, doesn't matter. Every capital deserves respect. Okay. Because in Indian culture, we consider money as goddess Lakshmi. Okay, so already the video is so long. Okay, I am extremely sorry. And so if market bounces or reverses from these levels, you can easily go for a buy position. And if market shows upside, then obviously the resistance of 2008, 2010 is valid. 2002, 2004 is also valid from Saturday. But as a day trader, you can also look for some selling opportunity around 1988. Around 1988, 87 level. If you see market is reversing, market is going down, you can hit the sell button. Why? You can see I have just drawn Fibonacci here. The Fibonacci will give us the opportunity. Okay, keep in mind I'm on a 1 hour time frame right now. I'm on a 1 hour time frame right now. As a result, okay, you also need to check your chart on 1 hour time frame. And when you will see the market has entered the zone, switch to a lower time frame. Your analysis should be on higher time frame from stability, and for entry purpose, you should always use a lower time frame. See, I'm telling you that I have my buy limit at 1970. But in case I see after a few hours that market is market is going down with high selling pressure, then obviously I'll remove it. But I will not be available to mention it, isn't it? So take the decision wisely. And that's why I'm requesting you that instead of placing buy limit and sell limit, okay, always try to observe the market first and then take the decision as per the response from the market. Okay, I don't want to make the video any longer. I'm extremely sorry. Okay, bye bye, take care, see you tomorrow.